So today's webinar, and I think I already shared with you of the topics right here, but let me stop sharing the slides. And first of all, letting you know that whatever question you have after we did this webinar, you can always go to appointment and then pull up our appointment, and then you can see all the partners right here, and you can book our time and come to ask us questions, right? YouTube channel is also important because if you can get on YouTube channel, then you can see all of our webinars happen in the past. And this is where you knew that you're gonna have the missing webinars that you wanted to see, but you never really got a chance to see. It's all deposited in here. We have over 1,200 webinars. So with that said, quickly, let's just go into what we wanted to do for you today with the topic. So let me go to share the screen, retirement contribution. And I know you asked me that, well, right now it's already December. Are you sure we still have time to do something to save time? The answer is yes. Let me tell you what that is. Let's just get going. And this is our firm, and we, you can quickly glance, we are a well-established medium-sized CPA firm, and I want you to know us. So this is the slides that we always giving out to talk about our firm. And then this is the 2 books that I published already. It talk about, how you establish business and also how you grow your business. So it's a book that I would recommend you to read. It's just because it's real stories. It's nothing fake. It's about our client. It's about how Community CPA comes through these stages. No responsibility disclaimer. It just says that the webinars is free education, and we want you to know us, and we want you to learn. But once you get there, to really implement that into your personal tax and getting your personal tax savings, and you want to make sure that you have someone behind you to take responsibility of what you do, or you just know that you know it, you can do it, right? So it is not our responsibility if you listen to our webinar, did things that's not right, because you need to get some professional help if you need, right? All right. So generally speaking, every time we talk about tax savings, and we're talking about the taxes that otherwise you will pay, but now you don't need to pay because you got these savings. The general guidance around the saving is from your 401k plan, from your retirement saving, because whatever money you put away to your future retirement benefit, the government says that, oh, you don't need to pay taxes for this amount you can put out. So, you need to know that how much you can put away, which we tell you what that is, but we're also going to tell you what that tax dollar is. Because my goal, when you go to financial planners, they tell you that, oh, you can do this, you can do that, but they don't really have the dollar amount for you, how much taxes you're going to save. I'm going to give you that one right now. So we want to let you know that generally today's webinar is all about retirement, because we want to focus on that. That is just one of the tax saving we give you, not all of it. If you come to Community CPA, do your tax saving planning, work with us for 2024, this is just one of our tools. It's not all of it, but it's still good for you to have this one. Now, 401k plan is one of the things, right? You have 401k, you have SEP plan, you have simple IRA, you have your other plan, cash balance plan. These are all names. I'm just name dropping. It is sometimes doesn't make sense to you because you didn't really work with it. But just hear me and have these names, just be eardropping on them, just know them. And so because once you know the terms, you know the name, and you would give yourself a good saving, I promise you. Now, let's look at 401k plan. 401k, the 2025 contribution limit for employees younger than 50 who participated in the 401k plan, right? Because you may be working for your employer and they offered you 401k plan. And you probably, thinking of, I don't know, I care about it. I'm still young. You do, you care about it. Let me tell you why. When the year is passed, like 2024 is going to end in like what, 2 weeks? Once these 2 weeks is gone, the plan contribution you did not put in will never come back to you. You can't catch up to the past. So you lose $20,000 tax saving you could have, you didn't. And you may ask me, what is $23,000 tax saving? What does that mean to me? Let's say your tax rate is 20%. 23,000 times 20%. So you missed $4,600 tax saving. Did you pay that taxes? You did, because you got withhold on your W-2, you already paying. But imagine if you do that for yourself, nobody gets your $23,000. It is going to your 401k account. If you put that in 401k account, the employer did for you. You just need to go to employer to withhold that 23,000 into your 401k. If you did that, you get $4,600 tax refund back just because you put it away, right? The contribution amount also apply to 403b. That's another kind of 401k plan. A lot of nonprofit organization employee would have that, right? And so those are the saving for 2025 increased by $500. So this is self-deferrals. And of course, for people who are older than 50, you get this catch up, $7,500 catch up on top of the 23,500. And if you are over 60, between 60 and 63, only 3 years, now you have this super catch up. Super catch up, it will allow you to not only do the $23,500, you can add $11,250 more. This is Secure 2.0, just came through. So the people, if you are someone who works in a company and they offer 401k and you are over 60, 62, 63 years old, and you should request that to be put into your 401k, and that's allowed, additional super catch up. But why am I talking about these things in this kind of setting? Like, in my channel, Community CPA's channel is more for small business. So why do I need to talk about that here? If you are a small business owner and you can set up 401k plan, so in 2024, you can put away up to $69,000 income, your revenue, away to be non-taxable. It's almost like you have something cost you $69,000 and you reduce that out of your income. It is your total sales minus 69,000. So you pay less taxes on your business, am I right? But what happened to that 69,000? It's not a piece of furniture you bought. It is not some expenses you did, mileage claim you did. It is actually went directly to your 401k plan under your name, sponsored by your business. That's why we're talking about these numbers, because they are real tax saving. You're saying that, Ying, okay, fine, $69,000, how much that equals to tax saving? If you are a small business with that much revenue you're gonna make, your rate is probably right around 26 to 37%. I'm just gonna use the lowest rate. You save $17,940 in tax dollars. I'm not even counting on the state saving, just counting on the federal saving. If your state charge you almost 10%, then there you go, $6,900 saving. If I plus the federal, 6,900, your total saving is almost $25,000 on taxes. So why are you not doing that? So this is why we are talking about this right now, and to make you be aware there is a way to save money, save taxes without spending it, without go out shopping for new cars. No, without doing any spending, just totally putting money away, putting money away properly. SEP plan is another one, okay? This one, you can put away up to 69,000 in 2025, it's become 70,000. So there is a requirement in that for our business owner. You must be paying yourself a compensation when you do SEP plan. The minimum you have to pay is $750. And other condition is you must be 21 years older and you must work 3 out of the last 5 years in the company, so you can get this kind of contribution, this kind of retirement contribution. This is SAP plan. Then the other one is simple plan. The defined limit to the simple plan will increase in 2025. In 2024 was 16,000. So the SEP plan or simple plan, they are all kind of lower than the 401k. So I just want you to know, that's why we put the 401k first. It is our, in my tax planning sessions, I prefer doing 401k just because it gives the most deductions I needed, the tax saving I want to see. The other plans has their own benefit as well. For example, the one I was talking about on the SEP plan, this one doesn't need to be processed through payroll. But when you do 401k plan, you have to process your self-deferral through your payroll. So it has a little bit of complication, right? You need to plan your payroll as well. But then for the SEP plan, what I'm showing you here, it is totally contribution from the company. So it's a check from the company to your SEP plan. And that check can be written in 2024, can also be written in 2025. You just need to make sure that you contribute to 2024. The timeline, the due date in 2025 is the time you file taxes. So if you file your taxes in April 15 timeline, then you contribute before April. But if you did extension becoming September or October, then it is September and October for the due date of 2024 contribution. You see right here, when you file 2024 taxes, and these contribution will due at that time, not in 2024. So even if you don't have money today, saying that, oh, Ying, I don't have money, what am I going to do? I can't put away that money. But you're going to have it when you file your taxes, right? So that's where really don't miss the limitation that the IRS give you. Because if we miss 2024, you don't get it back and you lose it. You know how many years life you have? I mean, so if we make sure that every year we maximum on the retirement, by the time you retire, you got a lot of money in there. That's one thing. But even if you say, well, what if I die early? What's going to happen to my 401k? Well, you don't lose it. Your spouse or your kids will get it. Okay, they may have to withdraw that money for whatever on the estate side of the taxes. We also do estate planning, folks. So if you have that question, we can go down the list to explain to you. But the bottom line is you don't lose the money. It didn't go to IRS. But if you paid income tax on your profit, that money don't come back to you. You give to IRS, that's period. That's the end of the game, right? So make sure you knew. So we talked about 401k right here. This is the 401k. And we touched on the catch-up contribution, just so you know, if you are over 50, you got catch-up. If you're over 60, you got a super catch-up. So just don't forget those things. I just want you to know the buzzword. So when you work with your financial planner and you can, you can say those out, they know what to do for you. But if you don't know and they happen to now remember and didn't really think you were going to do that, then they don't mention, then it's your loss, right? So then this is the simple plan. It's the same thing. And it is also have this super catch-up things for you, but the super catch-up and the catch-up have a smaller amount. So of course, if you do 401k, and you don't have enough money to do the full amount, you do smaller amount, that is allowed. But if you open up a simple plan, you want to do more, no, you have to go to open up 401k. So in a lot of ways, it may not be beneficial for you to set up a small plan and instead of open up a big plan. And if you can do most, you can do, but not to worry about the limitation in the smaller plan, right? Of course, there is a reason why people just do simple plan, because the administrative fee is lower than the 401k. But you can shop for the plan holder to know who charge you what. But remember, there's also a tax credit for you, for your company to set up these benefit plan. And there is a $5,000 tax credit you can use. That's a lot of money to for 3 years, they cover that basically. So don't get hung up on the fees. It is not a huge consideration in terms of the benefit you save on what? 20%, 37% taxes. They charge you what? 1%, 2% compared to your saving of 20% up to 37% is not comparable. And just forget about those little things and focus on what you can save in the big scale. Now, there is a cash balance plan. Cash balance plan is huge. You could have it, and you can put away $275,000 without paying taxes. It is your company expense. Imagine you made $500,000 profit and you can put away $275,000 to your pension plan. Why are you paying taxes? Why are you not thinking about doing stuff like that? Of course, it is not as simple as what Ying just goes, oh yeah, it's $200,000. No, we need to involve actuarial calculation, things like that. But the idea is there is a maximum 275,000 for 2024. Did you meet it? Did you try to meet it? If you didn't even know about it, you're missing out on tax deduction. This is why you're thinking, well, why am I paying so much taxes? Because you didn't utilize the tools. You didn't. Now, IRA contribution, this one a lot of people know, right? In 2024, it was $7,000. 2025 did not move the dial. It's still the same. And if you're over 50, you have this $1,000 catch up, right? All right. So my whole point to you is that plan ahead to save. The contribution amount will make it easier for you and your employee to save a significant amount in retirement plan in 2025. So if you know the limit, you want to push for the limit. You contact our firm, we can tell you what is your reality in saving. We can tell you based on what you give us, we tell you, how to save. There's one of the biggest way to save is this retirement account. Really is. So if you have a question, of course, when you come to do the planning, of course, retirement is not the only thing we do. We have toolbox and we know that retirement is one big thing. For this 30 minutes, I just not want to knock into your head, retirement is the biggest place to save. You can have 401k plan, you can have cash balance plan, and if you don't want to do complicated one, you can do simple IRA, SEP, and all of these things will help you save. Don't try to pay taxes when you still have rooms to put away money to save yourself from taxes today, right? Now you say, is it too late? Now it's December 17. No, it's not. To save taxes for 2024, you can still do. You can still open 401k solo plan. You can still open. And you can open the plan, contribute your personal deferrals via your last payroll. So you're going to have your last payroll in December. Do that right now. And then you can do company match, the 25% of your gross salary later when you file your company tax. So you can still, but you need to open 401k solo plan. You can open 401k plan, regular plan, but you cannot do deferrals anymore, but you can do match 25% of the compensation to 2024. So you don't lose the open door for 2024. And you can open SEP IRA, simple IRA, all of these accounts. Open it up right now. And for 2024 contribution, not late. And not late to open. You can still open for 2024 contribution, right? But you need to hurry to contact your financial planner to get the plan set up. If you don't have a plan set up, the savings has no place to go, all right? And then, or, if your financial planner is on vacation, you just wouldn't have anybody to help you. And we have in our firm, we will send you to our firm, our firm's wealth division. So they will set it up for you, but you still have time. Remember those partners, this list, when you go onto our website, you actually click those names, and each one of us, other than me and Dr. Howe, each of those partners, they know certain areas of the business, and you have this 30 minutes non-payment consultation you can do. But of course, and you can also take my time, and I do charge a time on there, and it is 45 minutes for $375. We do charge, but we will get your answer. We never let anyone walk away without answer. We give you the answer. In reality, if we didn't answer your question, we give you money back. We have never ever gave any money back to our client, not because we're so bad. It's because there's nobody felt they didn't get the answer. Everybody knew that we did a good job. And tax planning time, we still have time. We still have time now to end of December, and some of the planning item can be implemented even in January, but just know that planning is the key. Planning is the super magical key for you to save more taxes. I am telling you it's super because it is super magical. It is not me imagining it. And we have so many. I myself just getting so busy around this time. I always tell my folks that my busiest time is from the middle of October all the way to the middle of January. Just so a lot of planning need to come through, and we need to think for you so you can save more taxes. And we want you to save tax legitimately. So we don't do anything wrong, just save taxes properly. And then here is our contact information. So I hope this gives you an idea of how to contact us, and make sure you contact your people right away, contact your planner right away, get your 401k in, get your SEP plan in, do whatever you can. Save that taxes for 2024. When the door closes, you cannot do it anymore. It's not like, oh, I didn't contribute in 2024. In 2025, I am going to double what I can do. No, there is no such a thing. Please be aware and get it done. Okay, I'll talk to you again on Saturday. On Saturday, I actually talk about 529 plan from head to toes, how you do it, who you can do it with, how much taxes you're going to save, what you save, what if you didn't use, what if you used, what if your kids don't want it, and things like that. We're going to explain 529 from head to toes. Okay, I'll talk to you. Bye.